Crushing it in the commercial real estate space. I'm your host, Sierra Hoffman, and on today's call, we have Bob and Diane Bowman. So thank you both so much for being on the show today.
Oh, thank
Thank you.
you. Thank you for having us.
Of course. So as usual, I always like to start off by knowing more about your story. So tell us what you did before and how did you guys get into commercial real estate?
I've been in commercial real estate for a long period of time. I actually started in a long time ago. We'll just say a long time ago. That's how Bob and I met. I was with Silverman's and American Eagle when Silverman started American Eagle in 1977. And
Wow.
I did demographic research for them. And then over the years, once you get into real estate, no matter what job you apply for, they put you back in the real estate department. So I've worked for them. I've worked for a CPA firm doing commercial real estate, W.R. Butler Company in Tampa. I worked for their CorporEx division doing high-rise construction. Spent 17 years working for a residential home builder. We did land development. We owned our office buildings. We had storage units, warehouses, you name it. We did a little bit of everything.
Wow.
And then it was actually while I was there that Bob went to a seminar and learned about single family homes, and we started buying single family homes. And when that market changed is when he decided that we would move back into commercial, which I thought I was getting out of.
Got it. So you guys have been in the game for a very long time, started off in the single family investment side of things. And then I'm assuming like when the crash started in 2008, you're like, okay, we need to pivot and do something different.
Yes. Yeah, we were watching the infomercials at night and watching people talk about how much money they were making in real estate. And we were at a point in our life where I wanted to make change. And so I quit my job. But I never told my wife. And found a seminar. And so one of the things that we value is education and real estate education and being around people that are actually doing the business, that have similar goals and aspirations. We went from single family, and when the market changed, real estate crisis came, we had to sell everything that we had, and we basically lost all of our income, our net worth. By then, Diane had actually quit her job as chief financial officer for the investor that she worked with for 17 years here in Orlando. And so we had to reinvent ourselves, and that's where we decided that we wanted to get into commercial instead of the residential side for equity value, cash flow, and the opportunity to really make much better money than we were doing working for somebody else. And that's where I went to a private money class to learn how to raise money. That's how it started. Didn't know anything about apartments or commercial real estate, and learned how to raise money very quickly. And that's how we got started. We bought our first apartment in 2008. We got involved and closed in January of 2009. I guess it was.
Yeah.
And it was property out in Texas. And so we took off. We just took off from there. So
awesome. That's exciting. I'm sure you guys have been through the cycles as well. We're going through another cycle right now, and a lot of people are pretty worried about what's going to be happening in this market. So we'll get into that. But what I want to talk about, since I love having couples on the show, because this is a team business. Everyone has a different role that they do. So what is each of your roles in the business, and did that change over time?
That's a really good question. As a matter of fact, our roles complement one another, and they work quite well for us. Diane has a financial background, and she was a forensic accountant for several years, and she's just been in finance and accounting on the real estate side, working for investors all her life. So she does all of our back-end operation, and she checks on the property management company and deals directly with the accounting and making sure that we balance every month to the penny on everything that we do. So she's our eyes in the background, and I'm in the forefront. I'm on the operational side. I'm involved with the owner of the management company, and when we raise rents and looking at our operational costs and leading the charge, if you will, looking at potential acquisitions. And then when we get ready, we decide together if we're going to pull the trigger on that or not. But when we get into the deal, our roles are very complementary. And people call us, they think because we're husband and wife, that I know what she knows and they're asking me questions.
We have no clue.
We have no clue, but we do so different things. And that works in our relationship. We've been married now for 40 years. We were married on the 4th
Wow.
of July. And wow. And so
we're not sure when we worked together, people were not sure we were going to make it because we were very different.
Very much. We probably spent the last 10 years or so also educating and helping other people to either raise money, buy apartments. Diane had a formal agreement where she did a lot of education for Rich Dad and worked for Rich Dad Education for a number of years and taught people how to buy commercial real estate. And as we bought apartments over a period of time, when the market started changing back, probably around 2016, 2015, value of real estate went up and cap rates became more and more compressed. We started buying some office building. So we own an office building, a really nice one outside of Dallas, Texas, and 7 office buildings in Charlotte. And they've all done extremely well. And it's a totally different tenant profile, if you will, with longer leases. And we really enjoy just commercial real estate in general and not just apartments.
Yeah.
So, but our functions are really make our relationship work and make the business work.
I love that. So you mentioned you have some office buildings, you've got apartments. Can you tell us what your overall portfolio looks like in terms of units and how is that diversified between the different asset classes?
Oh, I think with that, just for her and I, we own just under 2,000 units, apartments, and then in office space, over 200,000 square feet of office.
But we have recently sold off when the prices were so astronomically high on apartments and people were paying really dumb prices for them. We did sell off some of our older apartment assets. This is again really reading the real estate cycle. We're just paying ridiculous prices. So we sold assets early just because people were paying way more for it than what it was going to be worth at term. So the investors got more than what they expected over a longer hold period and a shorter hold period. So everybody was happy.
Yeah.
Great. Yeah. And I think that's the advantage when you've been in this industry for a long time. You can tell when things don't look right and they're like, everyone's overpaying for properties right now. It's a good time to definitely sell.
We feel that, and I say this often, that the value of any given piece of real estate is only worth the cash it produces today. Not what it's supposed to do or what the broker says it's going to do. And it's made it really hard for us to actually go out and acquire apartments in the last couple of years, but because people were buying on pro forma. And we had some apartments, a couple of like the 2 older ones that we just sold in St. Louis and in Huntsville before the interest rates went up last year. Boy, we did really well. We got out of those time. And it was all pro forma based. I can't believe it. But that's what people were doing.
But it was the market rate.
Yeah.
It was the market.
People were paying.
It was what they were paying. And we had a lot of people were doing that. And now, unfortunately, I'm getting those phone calls from other investors that do what we do that are in trouble, that are actually making mortgage payments out of their own pocket now and they can't pay their investors. And the market, as you were saying earlier, has changed because of the interest rate increase. And also the thing that's really changed is the cost to operate over the last 3 years because of COVID. Everybody thought, okay, I'll go renovate and I'm going to increase the rents, all this 200, 300, whatever it was. But I don't think what anybody anticipated in their pro forma back 2-3 years ago was the cost to do business, which eroded their NOI and their returns and their cash flow, and has made it very difficult for a lot of people now. And if they want to sell, now with the interest rates up, they're trying to get the numbers they show the investor. Because of that has also eroded values to some degree.
Yeah, the expenses have really gone up.
Yeah. So
much more than people anticipated.
We just got 2 deals we're working on last week. And so we're really excited about them, but it's all based on cash.
Absolutely.
Cash flow.
That's the strategy.
Yeah.
Cash flow. So earlier you
When
mentioned you've got some office and then you've got apartments just for people that are getting into the commercial real estate field and maybe they don't know what asset class that they want to get into. Can you explain what you like about offices and how is that different from getting into apartment building?
Oh, wow. That's a lot of different things that are really pretty neat about office. First of all, in terms of the property type, our business model, and it doesn't matter if it's an office or a storage unit or an apartment, our business model is always the same. We go and look for over the whole period, 11 or 12% cash on cash return and a 20% total annualized rate of return. And in terms of the asset classes themselves, we really don't like A properties because you're basically at the top of the rental amount,
Mhm.
not much room upward you can move when you're already have a beautiful apartment or office building and you're getting top rents. And then, of course, not like the D as in David properties because it's a lot of management, lots of cash flow, but you really can't build equity. And that's what we all want is that equity because that's what really helps us to gain wealth is equity over a period of time. So we typically, the B and C assets, prefer the B asset because it grows quicker on the equity side, it seems. The C
Mhm.
property is also really good, C plus, good cash flow. You have some equity over time you can build, but you have a tenant profile that's fairly limited in how much that they can
Mhm.
actually afford in the working class C properties. So you have to have a good demographic in order to be able to take a C property and really lift it and have some kind of durable value play. You have to be in the right market. It's all about being in the right market.
And just as a point, you asked about between office and apartments. The office space that we like is not high rise towers and things like that. We like the kind of single story flex office that can be used. It could be used as an institutional office, it could be used as a banking, it can be used as retail, so that you can have a wide breadth of different types tenants in there. It has a multitude of uses, and we like a large multi-tenant building. We don't want anything with just a few tenants that, the same as you would with a multi-unit. We want to have multiple tenants in our office space too, so that you're not relying on one or two big tenants to support you.
Yep. And that's a really good point because we really get the belly of the tenant businesses out there. And the key is for us, no elevators. So they're all based yeah, so it makes it simple. They're all single story assets. And boy, you can attract many business. Just like years ago when we had the real estate crisis, all those tall, high rise buildings, white collar jobs, and people that worked in those, typically those buildings were the first people that lost their job. And for us during the last cycle with COVID, we did extremely
Yeah.
well. Most everybody paid all their rents and they were up to date and we stayed well
Well, they
occupied.
worked because they could walk in their front door. They had their own restrooms. There was no shared space. So it was almost like they were going to their home to work. They didn't have to
Yeah.
associate with other people. They could go to their own space and work. And of course, none of us knew about COVID. Nobody predicted that.
Yeah.
However, having that space and been through this, there's more and more businesses now that like that type of arrangement. They know the benefit of it now.
Yeah. And a matter of fact, that building type became very much in demand during COVID and still is today, where owners want to have control over their environment and where their employees go and et cetera. They don't share restrooms with anybody that walks in the building. And there's matter of fact, that was one of the things that we learned when we went and bought all of those buildings in Charlotte. We actually ended up buying a whole park at the end because we ended up buying all 7 buildings. It's been very good. And in terms of the way that you analyze it, it's very similar to a unit-based analysis. It's just $1 per square foot. And so there are some calculations that are different than apartments. You have to have the right software to be able to
Yeah.
do that. And that's how I ended up creating a product called Commercial Underwriter to underwrite retail and warehousing and medical office buildings. And it underwrites apartments and storage units and many different types because you have unit-based analysis and you have square footage. but we love the office space because
Yeah.
you have longer leases, you have a business in there, and businesses that what we learned when we got started that they're willing to put their own money into your space to improve your space for their customers, and their livelihood is being it's in your building and how they make
Yeah.
their living. So the pride of ownership is so much different
Mhm.
than what we find in the tenant demographic in an apartment complex, which is really exciting. So it's a
Yeah.
lot less to manage in an office like that.
So would you say you like office better than apartment buildings then?
So you know what? We like to make money.
It's 6 of one and half a dozen of the other. There's more work up front to buying an office park because you have to read every lease. They're all very different. You have to understand what you're getting up front. Once you're in, there's a lot less management. An apartment is much easier to get into because all the leases are the same, a lot more property management companies for apartments and things like that. So a lot easier entry, but there's a lot more work the whole time you have it. So it just depends on what you get and how good the company is.
Yes. And we
That
have an attorney and a property management company that read and go through the leases. So it's not like like us having to do it, but it's important to understand what you're buying, and the leases
Mhm.
are going to be your responsibility to oversee. So we actually like both property types, single story office and apartments. Apartments are our first love, but
Yeah,
office is good too.
love it.
Yeah.
All right.
Yes.
You mentioned you have a software you developed. You created this underwriting software to be able to you made it for yourself, but now you've also been able to create it for other people that can use it as well to underwrite more easily. So can you tell us about how that has helped you analyze deals better and also your current strategy in this market environment? How has your investment strategy changed? How has your underwriting changed?
In terms of the software itself, the reason that I created it is that I wanted to buy office and I really couldn't find a product that would do what I wanted it to do from an investor's point of view. And so I needed to build something that was efficient, that was comprehensive, that was accurate, because I underwrite and look at a lot of deals. I really needed to dummy something up for myself. And I got tired of all the different Excel spreadsheets and the formulas being changed and the numbers.
You got tired of it?
Yeah, yeah. I personally got tired of it too.
Because he doesn't accept.
I don't do
really
Excel.
got tired of it.
And it was the need to create something that I couldn't find in the market for myself. And so I actually used my 8-year-old granddaughter to test it, didn't we? And make sure it was dummied up. And so and the other thing is when I underwrite a deal, I want to know, like right now, what is my promote? Meaning, what is my equity in this deal on a 65-35 carve out or 70-30, whatever it is. And I wanted to have something, I wanted the software to work for me. I didn't want to work for the software and go through all these tabs, and I just wanted it.
Mhm.
So anyway, over time, what I realized is that I couldn't do it on Excel just because of the type of calculations that we do would just drag everything down. And I also like working on an Apple computer, a little plug for them. And that's when I learned that Microsoft doesn't give Apple all of the attributes in Excel and some of that. So anyway, long story short, I hired a programmer out of my pocket, developed my own. And over a period of time, people would ask me, Bob, what software do you use? And I go, oh, I just have my own. Can I get a copy? I go, no, it's on the cloud. Every time you use it, it costs me money for the data. What would you sell it for? So anyway, we just started a subscription-based product, and it's just evolved over time. But I love to underwrite because nothing happens in real estate until somebody finds a deal.
To get an exclusive discount to the Commercial Underwriter software, go to commercialunderwriter.com and use the promo code CREBosses. You can schedule a demo there and make sure to use the promo code CREBosses, that's all one word, to get 10% off your first year.
So with that in mind in the deal, our business model from how we underwrote 7-10 years ago and in today's market has not changed because we follow the cash. And I have some people, Sierra, say, Bob, what cap rate do you buy at? I go, I don't buy a cap rate. I buy cash flow. Because at the end of the day, we have to have ample amount of cash to pay the lender and then to pay our investors. And there's better be some left over for us. And so we don't have a lot of tolerance for risk, and we just keep our eyes on the cash. If we close an apartment today or an office building, how much cash would we have? Where is the opportunity to grow the income? And is there any opportunity to decrease expenses by being efficient in how you execute your business model? But our business model has never changed since we got started because it's all about cash flow. And that's what my product, that's what Commercial Underwriter does. It gets you to that number very quickly. But yeah, wouldn't you say, Diane?
It gets you to that number very quickly, but it also gives you the opportunity to put in your value plays and to tell you what your investor returns are. And it does a lot more than that because you can't just buy in what the property is worth today based on cash flow. You do that, but you also have to know what it's going to be worth in 3 years, 4 years, and 5 years. Because if not, you could buy for cash flow today and not have cash flow in 4 years. So you have to know exactly what everything is going to be going on over the life of the project.
Yeah. And when we bought properties 10 years ago, everything was based on cash. And that in that first year, if you get to that 10, 11, 12% cash on cash return, it was a deal. But now it's gotten so competitive.
You can't do that.
You can't do that. If you want to buy an apartment, you have to take some element of risk is involved. And so I created a whole income value play broken out by year that helps me to evaluate that level of risk. And so that's what makes it work. That's part of what makes the product unique.
So I just want to switch gears a little bit here and walk through one of the deals that you guys have gone through. So could be the one that maybe was more difficult than the others or one that has an interesting story. Tell us how you found the deal, what you liked about it, what didn't work, and how you were able to overcome any challenges with that property.
That's going to be an easy one. So at the time we owned the largest apartment was about 135 units, and we found a portfolio of apartments, and there was 7 or 8. And we decided that we were going to make an offer to the bank because they were all in foreclosure. On the largest one, it was just under 400 units. And so we ended up making our offer and we ended up buying the deal. We knew that there was a lot of work to be done, and it ended up being both a tenant and an asset repositioning.
And a management.
And a management. So what was memorable, there's some crazy things here, but the first thing is that when we took over the apartment was originally owned by somebody from this church in North Carolina. The property was in South Carolina. And they had all of these people. We had about, 13 employees, 12, 13 employees, because it was a big apartment. They all belonged to what was considered a religious cult. And the state of North Carolina was actually trying to shut them down. And Deborah Norville, in Inside Edition, actually put some cameras in the church and did a whole story on it. We didn't know any of this. And so when we got into the property...
But we inherited though.
Yeah, we noticed some really unusual things happening. And it was about 6 weeks into it or so, one of my vendors came up and said, "Hey, Bob, are you going to keep these people here and all this?" And that's when I was informed of what was going on. And so the management company never told us that they belonged to this cult. And you can't fire people because of their religion or anything like that. We fired the management company. And so Diane and I take over almost a 400 unit apartment out of Orlando, Florida. And so we got to get in there and we got to take this thing over now and figure this out. And we went in and we hired a really good PEO. It stands for Professional Employer Organization. And it's if you're not familiar with the PEO, look at them. They're a whole industry and they're like your HR department. They do the payroll and they make sure you're compliant.
They're a co-employer.
They're a co-employer. Exactly. but we direct the activities of the employee. Okay. So anyway, over time, we ended up spending like $3.3 million in rehab.
Wow.
We had to put new roofs on, and the roofs were so bad. There were 13 accidents, and 2 people actually fell through the roof into the kitchen,
Wow.
and one of them had to go to the hospital because the roofs were so bad. We didn't know this. This never came up in the inspection report, and we couldn't pay investor distributions. We were going to pay them at month 18, but we couldn't even start until year 4 because
Wow.
it took so long to turn the
And we had to
property.
do a cash call.
We had to do 2 cash calls, and we had to get 2 or 3 bridge loans, I
Yep.
remember.
Yep.
And then we had a fire.
Wow.
And it was right before Christmas,
2014, right before Christmas.
2014, and 5 people were killed. And
Wow.
3 of them were children. And it had
Oh, wow.
I got the call, and we lost all of our employees. It was so dramatic. They never figured out what the cause of the fire, what caused it. And apparently this was a building, and this was really important information. If you're buying a property built in the 70s, the mid 70s or earlier, there were no firewalls. Some of these
Mhm.
buildings had anywhere from 10 to 16 tenants, but between the different apartments, there were no firewalls up in the attic. And so when the fire started below, it went up. Fire rises, right? Smoke rises, and it
Yeah.
just spread right across the top. And the entire building was
Wow.
raised. So instead of rebuilding the building, people moved out. They said it was unsafe and et cetera. What we did is the insurance company asked me, "What do you want to do?" Because when you have a fire, any kind of issue at all, the money always goes to the insurance company. It doesn't
It goes
go
to the bank.
or to the bank. Yeah, it doesn't come to us as GPs. So we
Mhm.
said, you know what? We're going to put the best and highest quality firewalls in every single building. That's what we want to do. And so we hired a contractor, and we made every building. We went through all the electrical just to make sure. We upgraded some boxes, whatever it was. And then there was a little bit of money left that they just applied to the loan. But we said, you know what? We're not going to rebuild. We're going to leave it like it is.
Just took out those 16 units.
Yeah, we just took out the 16 units. We had 400. It didn't make a big change in our value. And also, you don't want to build a building unless you can build it very near and replicate what's already there, which is hard to do sometimes. But we wanted to make the property safe and the community safe. And so that's what we did. And we kept it. And then we came to term after 7 years and sold it. And by then we had hired a really good management company. We had turned the tenant base. We made all the improvements and raised the rents. And the property was worth quite a bit more than what we paid for it. It was it was a really good deal at the end.
The investors ended up all being very pleased with their return when they finally got it. They had to wait a long
Good.
time for it. And that's one of those things where if you're going to do something like this, a repositioning where you have to go in and there's not going to be any return for a period of time, you really need to make sure that you're putting the right investors in the deal. These were high net worth individuals that didn't need the cash. They weren't looking for the cash flow. I don't think any of them were thrilled that they weren't getting it right away, but it didn't hurt any of them. Nobody was upset about it. Nobody was upset about the cash calls. They just needed to know what was going on. It would have been completely different if we had been just raising money from people who were using their retirement accounts or they were putting in $50,000 or $100,000. You wouldn't do that for something that was this high risk property. You would
Right.
not use that kind of investor in that type of deal.
Yeah. And we far
Exceeded the
returns, almost doubled what we told them they were going to get. So
But they waited longer for
but
it.
they waited. Yeah. And
Yeah.
everybody happy at the
They
end.
were all very happy.
But it was hard. That was the hardest deal. Even today, Sierra, we say never want to do a property that requires that much work. There's a fine line between rehab and reconstruction. We don't want to be in the construction business.
We don't want to rebuild
course.
anything.
You don't want to rebuild
Yeah.
anything.
Awesome. I really enjoyed having you both on the show today. Thank you for coming. And where is the best place for people to go online if they want to learn more about you and if they want to learn about the underwriting software that you offer?
The best place is to go into commercialunderwriter.com, www.commercialunderwriter.com, or they can call me if they like at 321-239-0647. Or my email address is bob_Bowman@outlook.com. Bob_Bowman, BOWMAN @outlook.com.
Perfect.
The best
All
way.
right.
And
Yep,
thanks, Sierra.
thank you. We appreciate
That's
it.
Yes, and thank you so much for the opportunity.
To get an exclusive discount to the Commercial Underwriter software, go to commercialunderwriter.com and use the promo code CREBosses. You can schedule a demo there and make sure to use the promo code CREBosses, that's all one word, to get 10% off your first year. If you're looking to level up your investment game, join the Commercial Real Estate Bosses community. It's completely free, and inside you will get access to our Passive Investing 101 Masterclass, as well as regular live trainings where you can ask questions, and access to industry professionals and like-minded investors. Join for free today by going to crebosses.com/join. That's crebosses.com/join. Or click on the link below and I'll